Whether you are an experienced investor or perhaps brand new to investing, whether it's investing in public or private markets, I wanted to take a few minutes today to introduce all of you to Startup Investing 101. Now, this is specifically going to be focused on equity crowdfunding, which is brand new as of 2016. This basically opened up the private markets to investors of all backgrounds, regardless of wealth or professional knowledge or anything else. Today, I'm going to talk about why you should care about those new investment opportunities, what equity crowdfunding is, and help you get started by learning about Crowdwise Academy. My name's Brian Belay, founder of Crowdwise. Now, for roughly the past 80 to 90 years, investing in the private markets has been mostly off limits unless you are a very wealthy investor known as an accredited investor. Those are the investors who either make more than $200,000 in a year or have over $1 million in net worth. Now, when we talk about the private versus public markets are those stocks, bonds, other things that are on liquid exchanges such as the NASDAQ, New York Stock Exchange, etc., whether it's index fund investing, that type of thing. Private markets is getting in on the ground floor of some of the newest companies. They may only be a couple employees working out of their garage or living room. But by investing early, the potential for gains for investors who do take that much higher risk is a much larger potential upside. That's what we're going to talk about today. Look at this chart for a second. Notice how gains in the private markets have been shifting over time. In the 1980s, companies would go public a lot earlier, perhaps in the 50, 100 million market cap or overall valuation range. Thus, once they went public, there was still a lot of potential upside. Take a look at the shift in the data since roughly the 2010s. LinkedIn, Yelp, Facebook, and a few other big names. While this chart may be a few years out of date, and so there has been some more public market appreciation, you'll notice that all the gains are in the light blue, which is in the private markets. Now, for investors who are in the public markets investing in ETFs and stocks, that means that less upside potential is still available for those investors. That's shown in the dark blue here, whereas companies back in the 80s like Apple, Microsoft, Oracle, and even Amazon in the 90s still had a lot of potential upside once they went public. What this means is that investors should be diversifying more into these private markets. But this wasn't always allowed, as I mentioned. Also, take a look at the number of IPOs over time. The general trend shows that the number of companies IPOing has been on the decline. Now, when the dot-com bubble burst in the early 2000s, you can see that it did drop a lot. However, it's never picked back up to that range of the number of IPOs that were seen back in the 90s. One of the reasons for this may be that there's a lot more private capital available in the private markets now, from angel investors, venture capitalists, and other investors. Again, what this means is that there's more competition in the private markets and less reason for those companies to go public. So they're growing more, leaving less potential gains on the table for when they do go public. Now, this all changed for investors like you and me in 2016. That's when regulation crowdfunding of the Jobs Act went live, which gave anyone, not only accredited investors, the ability to invest in these game-changing startups. So, what is equity crowdfunding? Equity crowdfunding, also known as regulation crowdfunding, launched in May of 2016. This is when, for the first time since the 1930s, any investor, regardless of their background, can now invest in these private companies. It's different from Kickstarter in that investors in equity crowdfunding own actual equity. Thus, they share in the potential upside as well as the downside of these companies. But you're getting that equity, not just a t-shirt or a trinket or a product or a gift as you would on Kickstarter. Now, the potential impact of this for both companies and investors is huge. It opens up the market to allow a whole lot new ways and opportunities of raising capital for startups. And for investors, this is a whole new asset class for the 97% of Americans that it was previously off limits for. So, what is Crowdwise and who am I? The mission at Crowdwise is to provide quality educational resources, courses, tools, community, and more for any of these new investors in the new space called equity crowdfunding or online startup investing. My vision is for Crowdwise to become the go-to educational resource for this new generation of investors who's going to be supporting those companies that are shaping our future. I'm striving to save you, the investors, both time and hopefully money from sharing my own bad lessons by providing the best relevant content on equity crowdfunding. So, why is Crowdwise needed? Well, when I started out, I noticed several obstacles and issues. Now, it's great that anyone can invest in these private companies now as of 2016. However, as I'll show you and as you may already know, investing in early stage companies is very different than investing in public market stocks or bonds. In addition, there's very little training currently available today. You can look at all these companies online, but there are very few resources who are trying to teach investors how do you screen these companies, how do you look at the valuation, which ones should you invest in, and how do you build a diversified portfolio so that hopefully it can appreciate over time. In addition, there's a lot of scattered, outdated, and often hard to find information. Now, most of the information that you're going to find about investing in these early stage companies will come from angel investing and venture capital. However, not all the lessons from those apply to equity crowdfunding. So, I read all the books, took all the courses, listened to all the podcasts, read all the blogs to be able to take those key lessons from angel investing and VC and boil it down to what it means for equity crowdfunding to share with investors like you. So I'm going to be sharing all my Reg CF startup investing lessons, the good, the bad, and the ugly, with the ultimate hope of, again, saving you time and money. So, who am I? Who's this guy Brian Belay that's talking about startup investing? Well, my formal education is actually not from finance or startups, probably similar to a lot of investors like you. I do have a dual bachelor's and master's degree in aerospace and mechanical engineering. I also have minors in economics and French, so as you can tell, I always like to be learning new things. And investing in startups is a great way to not only learn new knowledge and lessons, but take part in something very exciting and hopefully build a successful portfolio along the way. So, for my professional experience, I worked for 10 years at a large defense contractor and aerospace company, basically as an engineer and a manager. I loved the work, but in my free time, I was always investing. I've invested in peer-to-peer loans, crypto, and lots of other things throughout the years. I think it was really the global financial crisis around the 2007-2008 timeframe that set my investment mindset, where it told me I didn't necessarily always want to be 100% in public market stocks or bonds. It taught me the importance of diversification, and so I've always been looking for opportunities like this, investing in early stage startups, to give a very small part of my portfolio that higher risk but higher potential return exposure. As of today, I've actually invested in over 100 Reg CF startups, so you can imagine I've probably looked at thousands of deals at this point, and I'll be sharing all my lessons with you. So, my personal why. Why am I doing this with Crowdwise? Well, I've always had this passion for finance and investing, as I mentioned, and in building the future. But what I want to do is hopefully save you from some of those frustrations when I was first starting out and trying to learn how to invest in startups and what is equity crowdfunding by sharing my lessons and experiences. So my promises to you, I'm going to save you valuable time. I try to base all my information on facts and data. I have no spam or ads. I promise you can unsubscribe anytime, but I hope to provide real value. I will be completely transparent. When I make good decisions and when I make bad, you're going to see the outcomes of all those things, and I hope to build community. It's hard investing online when you're not meeting face-to-face with these founders, so having a community of other like-minded investors is one of the best ways for us to all learn together. Crowdwise is going to be documenting those good, bad, and ugly lessons so that you can learn from my mistakes and my successes. One important thing, I have to go over some disclosures and disclaimers. I'm creating Crowdwise for informational purposes only. I am not a professional investor, lawyer, certified financial planner, tax advisor, or any other type of professional. Nothing that I say or do on Crowdwise should be construed as professional investment, tax, legal, or other advice. Please, always consult with your own professional for any of these areas. I am only sharing my own personal opinions based on personal experiences. Everyone's situation always varies, so this is general advice and it may differ from person to person. And please understand the risks of investing in startups. It's highly risky, so you should only be investing what you can afford to lose. However, with that limited downside, the potential is an unlimited upside, and the hope is that the one out of every 50, 100, however many startups that you invest in will turn into that 100x or 1000x return that will make all the difference for your portfolio. So Crowdwise Academy, you can sign up if you're watching this on YouTube over at academy.crowdwise.org. That's going to give you access to the same videos, but with that free account, you're going to have quizzes, you'll get certificates when you complete them, and you'll get access to the Crowdwise community. So make sure to sign up there if you haven't already. Now, Crowdwise Academy, again, is going to be looking to save Reg CF investors time and money. I'm going to be sharing those lessons of my own. I'm going to be providing the necessary skills and knowledge, and I'll be making updates to all these videos along the way. And again, you can get a level 1, 2, and 3 Startup Investor 101 certificate when you successfully complete all the coursework and quizzes for each level. Here's an example of those certificates that you get when you successfully complete each level of the Startup Investor courses. Now, Crowdwise Academy is 100% free. There are no ads or payment, just register today to create your free account. Videos are posted to both YouTube and crowdwise.org, but again, for that best experience and to be able to get your certificates and get the quizzes, make sure you sign up at academy.crowdwise.org. Also, there's going to be mini projects and capstone projects for each level. So, for example, you might create your first account on a funding portal at the end of one of these. Or, at the very end, you'll make your first Reg CF investment in a startup. Again, those 3 levels of Startup Investor courses go from beginner or novice to intermediate and lastly advanced, and I'm going to be adding new courses all throughout the time. Each course will have those quizzes and knowledge checks along the way, and if you successfully pass them all, you'll get those completion certificates at the end. Now, the way I built it up for Crowdwise Academy is I introduced the content for investing in startups at 3 different levels. First are those foundational investment concepts. This is the foundation upon which your investing in startup knowledge is going to start. Next, we frame the house, so to speak. This gets into the level 2 courses, where we talk about early stage essentials. Now, early stage is a little bit different again than those public markets, and companies are much earlier and much riskier because of that. So we'll be able to teach you some of the key things you need to know when looking at early stage companies. Lastly, we kind of put the roof on this house, and that's when we get into the level 3 courses for Reg CF online investing deals. We're going to talk all about due diligence, valuation, and really getting into the nitty-gritty details of how you screen and invest in your first or 100th Reg CF company. So, if you haven't already, enroll for free today at academy.crowdwise.org. We believe that if this democratization of access to capital for the entrepreneurs and investing for the investors is to be realized, then the education around that should be available to everyone as well, regardless of background or financial situation. That's why we've created Crowdwise Academy. We're going to be continuing to release new courses and make updates throughout 2021, so make sure you're always checking back for the latest. And last but not least, I want your feedback. Are there areas that's missing? Did you enjoy the course? Be sure to leave comments in all of the threads and the posts of the forums, or send me a personal email, brian@crowdwise.org. Thank you again. Make sure you sign up today, and I'm looking forward to seeing you back here for your first lesson.